let's talk about something that, can feel a little intense: investing. We're going to break down the easiest way for you to get started right here in Nigeria, even if you feel like you don't have a ton of cash to begin with. So, have you ever looked at one of those crazy stock charts or read some financial news and just thought, nope, not for me? Yeah, you are definitely not alone. It can feel like this whole other world with its own secret language. But the good news, there's a much, much simpler way to get in the game. And here's the thing, it really doesn't have to be that hard. We're going to focus on two of the absolute best tools for beginners out there: mutual funds and something called ETFs. Seriously, think of these as your perfect starting line. Okay, so first up, mutual funds. The easiest way to think about these: imagine hiring a pro to handle all your money stuff for you. You get all the potential upside of the market, but you don't have to do any of the heavy lifting yourself. So, the big idea, the main concept, is pooling money together. It's like a team effort. You, me, maybe hundreds of other people. We all put our cash into one big pot. And that creates a much bigger, more powerful fund than any of us could have on our own. Yeah, let's really run with that big pot of money idea. A professional, we call them a fund manager, takes charge of that pot. And their job is to strategically invest it in different things, like stocks, government bonds, you name it, to help it grow for every single person who chipped in. It's really that simple. And this is the best part, honestly. You don't have to spend your weekends staring at spreadsheets or trying to guess which way the market is going to go. The fund manager does all of that: the research, the buying, the selling. It's their full-time job to look after the fund for you. And what's cool is that you've got options. It's not a one-size-fits-all deal. If you're looking for growth, you might go for an equity fund. If you want something safer, maybe a bond fund. There are even balanced funds that mix the two, or money market and dollar funds for stability. There's something for pretty much every comfort level. Okay, so you've got the idea of a fund down. Now let's talk about its close cousin, the ETF. The name kind of gives it away: Exchange Traded Fund. All that means is it's a fund that you can buy and sell on a stock exchange just like you would a normal stock. Right, so just like a mutual fund, an ETF is basically a basket of different investments all bundled up. You could buy one ETF and instantly own a tiny piece of the 30 biggest companies in Nigeria. But the really big difference is how you buy and sell it. So what's the real difference here? It all boils down to timing. With a mutual fund, the price is set just once a day after the market closes. But an ETF, it trades all day long. Its price goes up and down minute by minute, just like a single share of a company. Okay, so we know what these things are, but why are we even talking about them? What makes them so perfect for someone just starting out? Let's get into the big advantages. It really just comes down to three huge wins. First, you don't need a fortune to get going. Second, you get instant diversification. That's just a fancy way of saying you're not putting all your eggs in one basket. And third, you've got pros managing your money. That's a pretty powerful trio for any new investor. All right, theory is great, but how do you actually do this? Let's get practical. How do you take that first step right here in Nigeria and start investing? Now, some of these names are probably going to look familiar to you. You've got companies like Vativa, who are really well known for their ETFs, and then you have big names like Stanbic IBTC, ARM, and FBN offering all sorts of mutual funds. These are fantastic places to begin your search. And actually, getting your money in is way easier than you'd think. You've basically got three simple paths. You can go straight to a fund manager's website, use one of the many slick investment apps on your phone, or, go the traditional route and talk to a stockbroker. You've got choices. Okay, before we wrap this up, I really want to leave you with the most important piece of advice in all of this. Seriously, it's not about how much money you have to begin with. It's about the simple, powerful act of just starting and then sticking with it. Just think about a number, like, say, 10,000 naira. It's not some crazy, life-changing amount of money, right? But investing that amount, or even less, over and over again, that's how real wealth is built. It's about the habit, not the amount. You know that saying about small drops of water filling a bucket? One drop doesn't feel like much, but over time, they fill the whole thing up. Your small, consistent investments work exactly the same way, thanks to the magic of growth building on itself. So I'll leave you with this question to think about. By starting small today, maybe with a mutual fund or an ETF, and just staying consistent, what will you build over time? What kind of financial future could you create for yourself? The power to start is right there in your hands.